bringing you a review of the FTSE 100 for the weekend. Obviously, analysis designed to give you an insight, a foresight, hindsight, call it what you want. Obviously, being ready for Monday's trading, the 23rd of March 2015. Okay, so where do we stand? Okay, so fundamentally speaking, basically what's led the FTSE to propel or being propelled higher? I've explained this in my chart on the FTSE 100. On the weekly chart, you can see this perfectly depicted, although the volatility index, I'll come back to that later on. Okay, so you can see this being depicted quite clearly with regards to the FTSE 100 on the weekly chart. Beautiful breakout here, bullish engulfing candle, and it's a thrust higher. Go to a monthly chart, and you should more or less see the market being thrust higher. So okay, so where are we? Okay, so looking at a monthly chart, obviously we've broken out of resistance there, and the main one was the level at 6,900. So we're in no man's land now. Basically, this market has the ability to go much higher, given the fact that we've broken out. Okay, so has to be respected from that perspective, especially given the fact that we've obviously consolidated now, broken out. Just get these trend lines together, store this one properly. Looking at a okay, so basically we've broken out. Okay, so impressive breakout on a monthly chart, and obviously on a weekly chart. Now the question is whether we can sustain this move. That's the most important question, really. Okay, let's just draw the resistance up here. Bear with me. Any resistance levels at all? So that's the only one here. Okay, that's basically where we stand. Okay, impressive break. So this has been led by number one, George Osbourne, budget. Okay, so there was a lot of tax breaks for the oil and gas explorers. Okay, which helped propel the those companies' index or those stocks higher. If you look at the oil and gas sector index this week, you'll see that obviously it has propelled higher quite substantially, so very impressive. I mean, I can quickly load up the those charts as well. That'd be interesting. Okay, so that's basically where we are with regards to the FTSE. So number one, Miss Yellens talk of prudence, attempting to talk the dollar index down. And as you can see with regards to the US dollar index, if you look at a daily chart, obviously you've got a bearish engulfing candle, quite an impressive thrust lower, and a 60-minute chart shows you a H&S formation. So obviously that will help commodities move higher, which as you can see with regards to oil, if you look at gold, you can see that we've had quite a thrust higher. So a very impressive move from that perspective as well. So the actual price of oil obviously has moved higher, and also with regards to Iranian talks potentially breaking down, that certainly propelled it from that perspective as well. Either way, it's a combination of two factors. Number one, Miss Yellen's prudence speech, okay, from patience to prudence, which obviously has caused the dollar to fall, thereby inflating commodities. And we all know the dollar has an inverse relation to commodities, and obviously the FTSE 100 is a commodity index, especially given the fact that the oil and gas sector alone are around 15% of the FTSE 100, which is pretty impressive. Mining stocks are around 8 to 9%, possibly higher. Okay, so you're looking at around 20-25% of the FTSE 100 alone is commodity related, so that's quite impressive from that perspective. Hence the reason why the markets have gone higher. Okay, that's basically where we are with regards to a fundamental perspective, and also given the fact that sterling obviously has fallen quite substantially, given the fact that there's been talk about the deflationary spiral obviously remaining low, and as you can see it's still languishing at the lows. The only reason why it had a pop is because of the talk from Miss Yellen. Other than that, it was basically moving lower. Okay, so sterling lower obviously is helping the FTSE as well, although it has stabilized, and something that we'll discuss at a later stage with regards to the impact of the sterling on the FTSE 250 and the FTSE 100. Now, as you can see, the FTSE 250 shook off the bearish engulfing candle, certainly has moved higher and broke out to new highs. Very impressive. Weekly chart remains impressive in a bullish market, and the inverted head and shoulders continuation pattern exists. The FTSE 350 again has broke out the H&S formation, given the fact that you've got Mr. Osborne's budget being perceived as bullish, given the fact that the fiscal position has improved, and that obviously is going to help growth, and the the recessionary measures or the austerity measures don't actually need to be applied as stringently. So obviously that's giving the ability for the indices obviously to interpret that as being bullish. And a weekly chart, you can see we've broken out very similar to the FTSE 100. So the FTSE itself remains very, very bullish, folks, from my perspective. It certainly remains bullish from a technical perspective and a fundamental perspective, provided obviously the dollar index continues its lows. If the dollar index starts to reverse and starts to move higher because we get talk of a June rate hike or a July rate hike, then obviously then the FTSE will stall as well, because it's all about commodities. Okay, so this is quite interesting. Going forward, although we did have Mr. the Treasury Secretary's Jack Liu, I think it's Jack Liu, who was talking up the dollar itself. So again, that'll be interesting come Monday. But for now, that's the situation that we find ourselves in. And the FTSE 100 does obviously rely on commodities, and which country or which nation on earth is one of the biggest commodity consumers? Yes, we all know it's the Chinese, and you can certainly see the Chinese economy, and you can see the Shanghai obviously being lifted to new highs. Okay, the weekly chart very, very bullish, very impressive, and obviously the FTSE 100 is following. Okay, so we also have the emerging markets again, certainly thrusting higher, building a base and looking for a potential move higher, given the fact that the dollar has been attempted to be talked down. Obviously, we all know the dollar has such an impact and on borrowing costs, funding costs, etc. So any talk of that being obviously brought down, or intentional debauchery by central banks, will help the emerging markets, and that's exactly what's occurring right now. Okay, technical perspective, fundamental perspective, as you've seen on the FTSE 100, very, very impressive. We're into new territory. Although the only concern that I have is my VIX. Okay, this is one of the biggest. I mean, it's been a real conundrum for me. Especially given the fact that the VIX is into support, which therefore implies the FTSE 100 is into resistance, and that hasn't been the case. So my VIX chart of the FTSE 100, the FTSE Volatility Index, is certainly giving me a false signal here. Okay, so you have to respect price action for what it is when the market breaks out. I mean, we can all call it a fake out, etc., etc., but it has fundamental catalyst backing the move higher. And it's very, very impressive, especially if oil starts to make a pivot low and starts to reverse. I mean, that will really fuel the fire in the FTSE 100. Okay, and if the dollar index starts to move lower, if interest rate expectations start to get pared back, obviously causes the dollar to move lower, and the budget itself, as we all know, it has been interpreted as being bullish. The uncertainty regarding the economy, especially with this budget being revealed by Osbournes, this basically takes out all uncertainty regarding the election. I mean, it's basically a foregone conclusion that the Conservatives will remain in power, the status quo remains, and there's no hindrance on potential investments into the country, from my perspective anyway. So that's the situation that we find ourselves in. Again, always bear in mind, you can't control exogenous variable shocks. We can control endogenous variables. So something that I did in my maths A level, also in my economics degree when we did econometrics, and we were doing advanced algebra at the time, and we were studying. It was very important that you understand, especially when we were attempting to forecast or based on econometrics. One of our essays or one of our courseworks basically was utilizing 4 or 5 variables and projecting the 6th variable. Okay, so how do we create a model, just like an algo the way in which you can organize an algo or an EA, basically to look at X, Y, Z variable to project, say, N variable, okay, i.e. the market, and basically in this occasion here, I mean, I've looked at all the endogenous variables in the system. Now, I can account for them, but any exogenous variables we can't account for, i.e. if there was some natural disaster, God forbid, or if there's any terrorist related activities, or alternatively if there's a Grexit on the cards. They're all classed as exogenous variable shocks, and that's something that we can't control. So we have to be obviously basically always be aware of that, okay, and certainly to take that into the consideration as well. So at this very moment in time, provided there's no exogenous variable shocks, although there is one from Greece over the weekend, as the Financial Times article states, Greek bailout summit ends in disarray. So that's certainly not a good article, and going into Monday, that certainly will not bode well for risk sentiment, etc. So if China starts to reverse and the Asian markets start to reverse, and and there's an exogenous variable shock or there's bearish news, etc., then obviously the tide changes. But for now, the FTSE 100 chart, you have to respect price action, folks. Price pays, and it's innocent until proven guilty, a very important term that we should all grasp and understand. Daily chart bullish, 60-minute chart bullish, as you can see the breakout here, very, very impressive. Higher highs, higher lows, and 10-minute chart, higher highs, higher lows. So there's nothing that you can argue and state that, oh, this market's going to reverse and it's X, Y, Z. Just keep your opinions to yourself. Really, I think it's the price action is confirming, the fundamentals are confirming, especially with regards to the budget and obviously Yellen talking down the dollar. So for now, the FTSE 100 certainly is bullish. Okay, obviously if oil prices start to reverse, commodities reverse, and like I said, there's an exogenous variable shock and the Asian markets start to sell off and so on and so forth, then the situation changes. For now, it's all about buy and dips for me, and that's exactly what I'll be doing with regards to the FTSE 100. Obviously, certain circumstances extenuating. Okay, okay. That's basically a wrap, folks, on the FTSE 100. I hope I've given you an insight there. Everything remains bullish. Bull, 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 bull. Risk on, risk off. Wax on, wax off. On this occasion, it's permanent risk on. Goodbye.